In Miami, developers started building fewer new office towers in the last year than they have since 2017. And we've tallied at least 7 big office projects that have been delayed or canceled. If everyone's still #LongMiami, why is this happening? Big picture economic factors are key. Projects that don't pencil out for developers just don't get done. But there's a bigger story here about the nature of the Miami market. Let's dive in. Miami is a young city, an outlier on the East Coast. It wasn't even incorporated until the 20th century. Always idyllic, it surged again in popularity during the pandemic, attracting new residents and businesses drawn to its climate, lifestyle, perceived low taxation, and relaxed COVID restrictions. This demand led developers like Related founder Stephen Ross, Steve Wakehoff, Michael Schvo, Mickey Naftali, Kushner Companies, and more to jump in among local builders to launch ambitious new projects. Those have included everything from luxury condos for wealthy individuals who like the Miami lifestyle to shiny new hotels and massive office skyscrapers, like Ken Griffin's $1 billion headquarters for Citadel. So there's been a huge influx of wealth and all the things that chase it, and developers started saying that Miami was the new center of the world. And with all the new wealth going into the city, that is true in the luxury residential market in particular. We've seen crazy records get set, and there's still a lot of demand for super high-end homes. But this market may be somewhat gilded. That's not to say that Miami's real estate is going to bust, but already Miami's boom hasn't been equal opportunity, and that trend is apparent when looking at overall demographic shifts. Between 2020 and 2022, Miami-Dade County actually declined in population by about 80,000 people. That 1% drop in population marks the first time the county has experienced a multi-year net loss in residents in over 50 years. All this despite the population of Florida as a whole growing 3% over the same period. Documentarian Billy Corbin, a Miami native, has been vocal about the fact that the people who built the city can't afford to live there anymore. Miami is getting too expensive, and it's having a ripple effect through the market and the city as a whole. Florida has rolled out programs like the Live Local Act, which incentivizes workforce housing development. And we've covered a ton of Live Local proposals that could expand the housing pool for lower income residents. But in a familiar story, this is not happening quickly enough. And despite being a hub for startups in a true global city, office developers are pulling back accordingly. They've reported that higher costs, increasing insurance premiums, elevated rates, and pullback from lenders have made it harder to get things done. And offices are seeing a cool down in leasing, though some say this is because there's not enough good product on the market. Beyond recent economic factors, there are questions about just how long the Miami gold rush can last. And this is an inflection point. While luxury products keep rising, those middle and lower income residents are struggling to stay afloat. So the promise of #LongMiami is facing a real test. What happens next? Let us know what you think in the comments and stay tuned to therealdeal.com.